Good morning. My name is Alejandro Zambrano, Chief Market Analyst with Amana Capital and Trade Captain. In this video, we're going to take a look at a few setups ahead of the non-farm payrolls. The market anticipates that the US economy created 310,000 new jobs. Now, the headline number is important, but we need to remember that as long as the reading is above 160,000 new jobs, then the unemployment rate will most likely remain around current lows at 4.2%. Now, as long as the unemployment rate remains around these levels, then it's likely, because of the tightness of the labor market, that we'll have higher wage growth. And that is really what the focus is at. The market anticipates that wages increase with 0.3% in the month of October. And if their reading is higher than 0.3%, say 0.4 or 0.5, it's quite likely that the dollar will gain dramatically against most of its peers. And we need to take this measure into account when we look at the headline number, because the headline number is very high. It's 310,000, and obviously this number itself is distorted because of the hurricane season. So if, for example, the numbers are 270 instead of 310, but the wage growth is strong, then I still think the dollar will see some support. On the other hand, if the headline number is really strong and the wage growth is weak, then still I think the dollar would actually weaken. Now, a third thing you need to pay attention to are revisions. The last reading showed that the US economy lost 33,000 new jobs. And obviously that could easily be revised higher or lower, and we need to take that into account when we look at the latest headline number. Now, let's take a look at the charts. This is the euro versus the USD, and because of the overall bearish trend, as you can see on this chart, which is a 4-hour chart, then I do like to go with the trend. So in the case of a good non-farm payrolls, in other words, a stronger number than anticipated, I would guess that the market is going to try to take out the 116 level, and if we do so, the market could go down to pretty much 114.93. On the other hand, if the numbers are bad, I would guess that a break to 1619 could lift the currency up to maybe 1720 or 1760. And then we'll see what happens, because if the numbers are not too bad, then I do think traders are going to look to sell around these highs and then target 116 again in a period of 1 to 2 weeks. So for the euro, keep an eye on the 1605, 1690 range. In the case of the dollar yen, it's very much straightforward. If the non-farm payrolls are good, then most likely we'll take out 114.45. By taking out that level, the market could target 115.38 in say Monday or Tuesday next week. And traders most likely going long on a break here are probably putting stop loss orders around this low here created yesterday, so pretty much 113.40. In the case of the dollar CAD, it's an opportunity to trade on the Canadian non-farm payrolls numbers. So for Canada, the market anticipates that the Canadian economy created 15,000 new jobs, whereas the unemployment rate should remain unchanged at 6.2% in Canada. Now, if the unemployment rate goes down to 6.1 or 6, then that would be very hawkish and bullish for the Canadian dollar. At the same time, if the Canadian NFP prints higher than 15,000, maybe 20 or 30,000, then that would easily cause the Canadian dollar to gain. If that would be the case, and at the same time you have a neutral numbers from the US, then I would guess that we'll take out 27.74. This level is a low created on the 16th of October, and if we take out this low here, we could easily and potentially decline down to another low here created on the 25th of October, and the level here is at 26.35. So on good Canadian numbers and mild or bearish US numbers, I anticipate a break to the downside. On the other hand, if the Canadian numbers are bad and the US numbers are neutral, then this is going to move up higher. And most likely, if the US numbers are really good and the Canadian dollars, or the Canadian economy numbers are really bad, then we could potentially take out the 29.43 level and be trading at 130. So this, guys, provides you guys with a quick little overview of which markets to watch. Now, if you want to, at 12:30 today, we're gonna watch the markets live together if you go to the live trading room at tradecaptain.com. You see that on the top menu to your far right, you're gonna see that there's a button called the live trading room. It's free to register, it's free to join, so do so if you want to, and we'll host a webinar and look at the markets together as the data is being published. Have a good day. Thanks.